Hello, everyone. Welcome to today's live. So I have a question for you. Have you ever wondered why your net profit doesn't match your bank balance? Well, if you have, you are not the only consultant who has asked this question. And there are several reasons why this occurs. You see, many consulting firm owners use the one financial metric that they know to make business decisions, and this is their bank balance. Have you ever used this financial metric in the day-to-day operations of your consulting firm? But let me let you in on a little secret. Come really close. This is the wrong way to operate your firm. You see, bank balance accounting will leave you financially stressed and strapped for cash. And I want to break that cycle today. I am 𝐦𝐨𝐬_CONNOR, CEO of Say Yes to Profits. I am a virtual CFO for consultants who desire to become fiscally responsible and cross the $1 million mark sooner than they think. We are streaming live right now on YouTube, LinkedIn, and the Say Yes to Profits Facebook group. So welcome all of our live viewers and welcome all of our replay viewers. If you have any questions or comments, definitely leave your questions and comments below and I will answer them, okay? Now, in today's episode, I am going to tell you why your net profit and your bank balance will never, ever match. Bank balance accounting is when you log into your bank account and make financial decisions based on its balance. Your net profit is what you want to generate each month, even each sale in business. More on that later. For some consultants, they wait until tax season to prepare a set of financial statements. Therefore, on a daily basis, they use their bank account balance as their main decision-making metric. Are you doing that? Let me know in the comment if you're making this mistake. Now, there are those other consultants who have hired a bookkeeper who prepares their monthly financial statements. And at the end of the month, they notice that there is a huge difference between their net profit and their bank balance. And oftentimes, their net profit is higher than their bank balance. And they often wonder why. And some even think that the bookkeeper has done something extremely wrong. And that's not always the case. Either way, operating in this manner is not suitable for a growing firm. Okay? Hear me clearly, it's not suitable. So let's deep dive into why there's a difference and what you as the consulting firm owner should do about that difference. First and foremost, let's examine your profit and loss statement. Now, your profit and loss statement is a combination of your total revenue earned and expenses incurred over a particular period. To determine your net profit, you would subtract your income from your expenses. The result will be either a net profit or a net loss. A net profit is a result of earning more money than you spent within that period. Conversely, a net loss is spending more money than you earned in that period. Are you with me so far? Yes? Good. Okay. However, the problem with a profit and loss statement is that you can earn revenue in 1 month, but receive the actual cash in another month. Therefore, no funds hit your bank balance in the month in which it was earned. So I'm going to give you an example of this and break this down so that you totally understand. So for example, let's say you earned $70,000 in sales revenue and you incurred $20,000 in expenses. That means your net profit is $50,000. However, out of the $70,000, you only receive $40,000, right? So you earn 70, but only $40,000 actually hit your bank account, right? That means that in that month, I said that wrong. You earn $70,000 and only $40,000 was paid. That means only $30,000 was deposited into your bank account. Okay? So $40,000 was not paid. I'm jumbling up my words. Please forgive me. Okay? So you earned 70, 30,000 was paid, 40,000 was not paid. Get it together, Octavia. So if you take the $30,000 received minus the $20,000 in expenses, that means your bank balance will be only $10,000. Do you see that? Okay. Now, on the other side, let's say that you received a bill on May 30th, but you didn't pay that bill until June 15th. Now, this bill will be classified as an expense on your profit and loss statement for the month of May. Therefore, your net profit will reduce for the month of May. However, the money would not leave your bank account until June 15th when you paid the actual invoice or bill. Okay? Now, those are just two reasons why your bank balance and your net profit will not be the same. Let's get into this a little bit more. Let's say that you have fixed assets, right? You've purchased fixed assets such as motor vehicles, plant or equipment, or office furniture. Now, fixed assets are not classed as expenses and will not go on your profit and loss statement. But the fixed asset amount will still be deducted from your bank account if the item was paid in cash. Now stay with me now because we're getting deep into this. This is getting good. Also, if you make or receive any owner's draws, investments, or loans for your consulting firm, they also will not be classed as an expense, and they will not reduce or increase your net profit, but they will definitely reduce or increase your bank balance. Okay? Now, the question then is, how do you fix the net profit and the bank balance difference? Well, your bank balance and net profit will never, ever, ever equal the same. Sorry to tell you, but not sorry. And truthfully, the goal is not to have your profit equal your bank balance. The goal is for your firm to generate a profit and increase your bank balance collectively. Okay? Therefore, we can conclude that there will be ways in which money will enter and exit your consulting firm that will not appear on your profit and loss statement. So you see how those two numbers will never, ever, ever really honestly be the same? Now, caveat here. Please understand that it is extremely dangerous to operate your growing consulting firm using just your bank balance. As you have now learned, many additional factors must be considered when analyzing your firm's financials and making business decisions outside of just looking at your revenue and your expenses. All right? Now, I always like to leave you with CEO next best steps because there are things that you can do to make sure that you have a clear understanding of your net profit and your bank balance, what each of them should be, and how you can increase each of them collectively. So, your CEO next best steps. With everything in mind that we just went over, I recommend that you prepare and maintain financial statements and a cash flow forecast. There are several videos that I've done that talks about preparing a cash flow forecast, and I will leave them in the comments, okay? And in the description. Now, with an accurate cash flow forecast, you will proactively review your revenue, expenses, and bank balance to ensure that they are all moving in the right direction, which for your revenue and your bank balance is up and your expenses oftentimes is down, okay? Now, with accurate financials, you can understand what occurred so that you can capitalize from your successes and repair your mistakes in the future so that they never, ever, ever happen again. Now, here's the thing. The most successful consulting firm I've worked with has a solid financial management system that encompasses financials, forecasting, planning, and action steps, okay? Their financial system covers the next 12 months, but it is broken down into quarterly, monthly, weekly, and sometimes even daily milestones so that they can hold themselves accountable for achieving their goals, okay? Now, your goal as a consulting firm owner is to generate a profit and increase your bank balance at the same time. And this, my friend, is the way that you say yes to profits in your business. Okay. Now, to begin building a solid financial management system for your firm, I am going to give you a gift. I am going to recommend that you download our More Money, More Profits checklist. This checklist will kickstart your ability to have more money, more profits, and pay less taxes immediately while building a solid financial foundation that will position you to proactively scale your consulting firm. All right. And don't forget to subscribe, like, and share this video right now. There are several consultants and small business owners wondering why those two numbers don't match. And in this video, I explain everything, and I want you to download this gift because it's going to help you increase your bank balance, your revenue, and say yes to profits in your business. All right. Now make sure that you come back next Monday at 12 p.m. Eastern Standard Time to join me live. And if you are watching the replay, you can leave your questions and comments below and I will answer them. Until next time, say yes to profits, everyone. Toodoo!